These numbers really are from probably like a week ago or a week and a half ago, and they just get released today. One of the issues is there's been this huge rain. The big weather situation, and what do they call it, the bomb cyclone that came across the U.S. has absolutely affected all of the commodity markets. And so these numbers that we're getting today are definitely not going to be the final numbers, and they may not even be close to the final numbers, and there could be changes 2 or 3 times before we actually get any of the grain in the ground. That being said, that's really a recipe for a lot of volatility. So there's some opportunities out there. We just have to watch for them. And it's important to pay attention to everything that's going on because the market moves so quickly. Hence today there was some big volatility in the hog market. But let's go with the grains first of all. Now the wheat was the one. In the wheat market, let me take a look. I'm looking on the board here. So the plantings were a lot lower than they expected. Now, the prior, I think that you have. I know that you have the reports. You can see the numbers, and they have in million acres. So 47 million. They expected 46 million, and then we got 45.7 million is what the number is today. So you would think that since there's lesser acreage that would boost the market a little bit, but we are right now heavy with supplies in wheat, and there just hasn't been very many exports going out. And even though we did get some going out to Europe, to Egypt, and a couple of other places in the Middle East, it just isn't enough to get this market off the ground. Oftentimes fundamentals should do a lot of things, but if we don't get the traders to step up and actually buy, it doesn't really matter how good the news is or how bad the news is, that the market just doesn't move. That's why we always say that there's no one bigger than the market. So this is one thing to kind of watch out for. So we're in a little bit of the buy the rumor, sell the fact kind of thing. We knew that there was going to be a little bit of lackluster trade because these numbers aren't going to be as significant as they normally would have been. Also, we're finally this is only the second report that we're getting after the government shutdown, because we've been trying to get caught up with all of our numbers. So last week there was a little bit of a crop report, and that helped a little bit. So the stocks report today tells us that we have more stocks in our hand in the U.S., and that basically I think ran the gamut across the board, and that's why we saw corn really plummeted. Wheat dived a little bit, but wheat is kind of low as it is. We're at the May wheat contract is 458 3/4 right now. It's exactly right now. We got down to 452. About a month ago, it was at 540 or 538. So the market is really depressed right now. We're looking for something to kind of get it off the ground. But unless we get a trade resolution, it's going to be very difficult to really move this market or just move the needle a little bit. And I think it's because people don't want to get into the market because there's so much uncertainty. So professional traders like yourselves, this is a great opportunity. You just have to really watch your P's and Q's here. And so, this is actually better than just, a lackluster market. So you just have to jump in where you can and kind of pick and choose. This is where options really comes into play, that you can just buy calls or buy puts, depending on which way you think the market's going to go, and you can protect your risk that way, just in general. Should we move to corn now? Would you like to do that?
Yeah, let me just outline something for the
Sure.
listeners and viewers out there, because we're recording this one. And just so you know, over here on the right-hand side of the screen, I do have the grain report with the estimated and the actual, and then also the prior, so that you can take a look at it and compare, what happened versus the expectation. I have that both for the stocks and the planting acreages. So just so you know, the quarterly stocks is up here on the top, which I just highlighted, and then the acreages is below on the bottom part. Then right below there, I have the commodity chart. So we were just talking about wheat, so you could follow along as well. I'm going to move this and now put up the corn chart, which corn, it really got bashed, huh, Jenny?
Yes, it did, and it made a new low, which we haven't seen in quite a while. That's kind of scary because normally, corn has so many participants. That's a real leader in the market. You have to have some big news to push that market up or down. And just all the gains that we got back, trying to recover from the sell-off that we had a couple of weeks ago, We gave it all back and then some. That was a little bit of a shocker, and I think that it surprised a lot of people, even a lot of the corn traders. But that just tells us that everyone's kind of given up on these markets. That being said, don't give up on it. I mean, we all have to eat. And there have been a couple of things that have, the weather has really hurt us a little bit, especially in the corn too, because ethanol has, a lot of the ethanol plants had to stop or slow down because of the weather. So that just adds more corn to the areas. And so, we're a big corn producing country, and you're going to see this kind of thing happening. This was a big surprise for us. So we thought that maybe there would be like a negative. The number isn't that big of a bad number. And so I think that's what the big surprise is. I think that the biggest thing is the planting. The planting intentions are pretty high, and that was the one that I think kind of surprised people, and that's why we see it plummet. Interestingly enough, because a lot of the farmers have moved from soybeans to corn just because of the nature of what's happened here, even though soybeans are you get more money with soybeans, if you can't get it in the ground fast enough, that's not going to help. So you go over to the corn side, and they've moved it over there. Now, it really reacted to that planting, to the increased acreage. It's like over 1 million acres extra that the prospective plantings are in, and it's much less in soybeans, and yet soybeans didn't rally the same way that corn plummeted. That just tells you that it's going to take an awful lot of positive news to get anyone deciding that they want to step in and buy this market. And I think that we're worried about real activity around the world because of the trade deal, that we're not able to really exercise anything with China, and it's really having a big effect on the market, and I think that the real worry is, and this is really just talk, kind of, so you need to kind of take that in. But this kind of talk has everyone putting their hands in their pocket. The worry is that we're going to have a longer-term effect on this. It's not like we have a resolution, then all of a sudden China is going to come in and buy millions and millions of tons of grain to make up for everything that we didn't get sold in the last year. That's not going to happen. What's going to happen is that we're just going to, it's going to be an uptick a little bit, and we'll start to move it along. But until then, we'll see. I heard a scary rumor here on the trading floor. A couple of people were talking that they felt that the president kind of likes the idea of having the tariffs as an issue that he can, as a go-to issue to pivot, and that he's not in a big hurry to settle this trade deal. So while you keep talking about it, it almost makes sense. And I guess if you said that 4 or 5 months ago, and you see like what's been happening in the last 4 or 5 months, you can say, oh yeah, exactly. Because as much as they keep saying, oh, we're right on the edge of getting this deal, it didn't really happen. And I think all those issues are what's playing into it. So now, here's the deal. These markets are going to just move right to a particular number and then just hold right there until other news comes in. And because of the lack of participation, you're going to see the markets be a lot more volatile. And of course, we're right at springtime too. So take a look at everything you see. And the corn had a huge washout. So it really shook out all the week long. So I think a lot of people try to get long thinking that this was a pretty good low. The market started churning up, and then it didn't happen. So everyone got washed out today. It'll be interesting to see what happens on Monday to see if there's any more follow-through selling. I don't really see it so much because everyone's been waiting for this day. And, of course, this is the last day of the month, the last day of the quarter. All of those things have to come into play. So April starts. Can you imagine April? I mean, it's time just flies so fast. So April starts on Monday, and we could get a big recovery. It could be turnaround Monday as opposed to turnaround Tuesday when the market starts up tomorrow on Monday. And I would say, there's a lot of, the volatility is pretty cheap in all of the options in corn, wheat, and soybeans, even soybean oil and meal. It's worth a shot to, step up and take a look at what you have. Part of the buys that I wanted to get in.
All right, Riley, that 110, 140 against the 80 put.
$5 July $5 calls.
Puts a 3. All right.
Corn was wait, no.
I think you gave me like
wheat was the July $6 calls, corn was July $5 calls, and the soybeans were the July $11 calls. Now, from the time that I said to buy them, whatever price it was that I put in there, the market did go up somewhat. I mean, a little bit, maybe, a couple of cents, really slightly, and it held there for a while. But of course, today was a big washout, so it gave it all back. But this was the July contract, so it still has a lot of opportunity to keep going. So I think that those are really cheap options to kind of like just jump in and hang on and see. If it pays off, it'll pay off in big dividends, and your risk is exactly whatever you buy. So from that standpoint, I think that's a play to kind of just take a look at. You can also do some spreading to help reduce your market, but as the market goes up in the grain market, volatility will also go up. So it'll go up explosively. That's why you don't necessarily need to put a spread on. You can just go ahead and buy the calls straight up. That would be my recommendation on that.
So would you do that now, or would you wait till closer to the close and do something? There could be some more capitulation, wouldn't you think, maybe in corn?
There could be a little bit, yeah. Definitely take a look. Now's the time. There's still about an hour and a half left, I think about an hour and a half or hour and 45 minutes left. Definitely take a look at it and price it out and put an order in. You can put an order in and see if you get it after 1 o'clock. If you don't get hit, you might want to step up and at least buy a couple or just get on board. And it's a decent shot to take for the risk-reward ratio, I think, in these markets, because when we move over to the cattle market and the hog market, we'll show you exactly where we did what we're talking about taking a cheap shot when the market is so low, when all the indicators go to the upside. All you got to do is step up and buy it, and you are a big-time winner. But let's switch over to soybeans. Let's move to the soybean market and take a look at that, because that's really normally a big leader in the markets right now, and that kind of sold off as well and made another new low like corn did. So it's kind of like everyone, crying their eyes out a little.
Yeah, I can see this one in the chart. And actually, the one thing I wanted to mention in corn before we jump off to soybeans is I'm looking at a daily chart here in corn, and it looks like we just might have breached the low. When you see things like this, how far do you think the stops tend to run? Like, what's a good benchmark that you see when we break down to a new low? Is it 10 cents, or is it just uncharted waters?
Well, it could be uncharted waters, but 10 cents is pretty high in corn. 10 cents is huge in corn, actually. I would say normally like a nickel. This kind of slipped a lot more than we expected, but this is just a little bit abnormal because of the weather and because we're just after the government shutdown. We're finally getting real news. This normally doesn't happen, but there's nothing normal about this year in grains, and I expect going forward we're going to have more abnormalities. So you have to really kind of apply all of your natural your trading strategies about watching your P's and Q's and making sure that you're managing your risk.
All right, so we're going to jump over into soybeans now, and I have a daily chart up. Is that the best type of time frame to look at right now? Okay, so I do have a daily chart up, and it looks like we pushed into at least most recent lows, and it's currently 886.
Yes, and it's really too bad because $9 was a big benchmark. $9 was a big benchmark, and we kind of breached through that support level. We started to come back, and it looked good, like we were going to, get a little bit of a head of steam. But the weather kind of like messed things up, and I think that the fact that we didn't get this trade deal, you have a lot of people on the sidelines, so no one knows what to do. I will tell you that as the stock market continues to rally, a lot of the funds are still in the stock market. At some point, we keep calling for a slowdown in the economy this year, and I think that you're going to see a little bit of trickling, balancing some of these fund portfolios. And normally this would have been a time to balance some of those funds and move it into commodities. But last year they didn't do it because the stock market kept rallying, and they didn't really do it that much this year. And I think it's because there's all this, all the shenanigans going on in these markets. But at some point, if the stock market starts to slip a little bit, you're going to see a lot of the money start to flow into the grain market and all the commodities really, and you'll see a real uptick in movement, and it will start to stabilize. I think that's what happens. There's a little bit of instability, and that's why we're seeing it overshoot its objective. So we're outside the norms. When you look at the RSIs of the world, like the strength indexes are way below 30% or way above the 70%. Even with the hog market, when it rallied, it was up almost 80% in the RSI. People started selling it when it hit 70, and they got killed because it kept on going. Just to give you an idea. So that's just something to watch right now. So with soybeans so low, it's interesting. We're not getting anybody adding to the selling of these markets. Just the buying just dries up, and so the market kind of drifts lower, and we're just sitting there because the farmers right now are not selling any of their grain. They figure that, if I already got a loss, forget it, I'll eat it, as opposed to just sell it for a loss and lock it in. So they're just kind of hanging on to it, hoping that we're going to get some movement with exports and start to support prices or get them off the ground.
I'm just curious. Let's say we had some outstanding trade news, and they're going to maybe lift tariffs, and they're going to announce some type of buyback. Would you see big limit up moves, say in soybeans, or are people? Is that too much? Would that already be baked in?
No, I think that there would be a scramble because everyone, let's just say this, that the government has cried wolf so many times, no one's going to react until we have actual confirmation. But once that confirmation comes in, you're going to start to see people pouring in. And when we move over to the hog market, I'm going to use that as a template as to where all the rest of these markets are going to go, or how they could respond and how they could react to, positive news and, fundamental news, because we have fundamental news and we have like outside influence news as well as technical traders, all the algorithms. So all those three things are the three pillars that really move these markets around.
All right, so let's talk about the hog market. Now I got to get a chart up for the viewers out there, and I am curious, what's the front month to look at for hogs?
April is available, but the June is really the front month right now.
Okay, got it. So bear with me a second, and I will get the chart going for you. It takes just a minute, but you can go ahead and begin talk about it, because you did lay out a trade in the in both meat markets actually. So why don't we recap that trade, and that'll give me a chance to get this chart.
Okay, all right, no problem. So when we originally were looking at all these trades, everything was depressed. What I liked so much about the lean hog market was we have like African swine fever just running rampant across China. Can you get that?
All right, hold on a second.
African swine fever running rampant across China, Vietnam, all of the Asian continent. I mean, there was almost talk that it was going to be, coming to the U.S. That did not materialize, and so that was just that. But the amount of the herd, now China has the largest hog herd. The size of the herd that they killed to stop the African swine fever is the actual size of the herd of the U.S. That's how big their herd is compared to ours, and so that is a huge number. And you know that sometimes that China kind of suppresses some of their information, so it was kind of difficult to see. Now the market kind of like had a little bit of an uptick. Now in hogs especially, if you look over their chart over the past maybe 4 years, it really has been delayed. Hogs and live cattle have been delayed in maturing in the electronic market because it's a little bit of a boutique contract. And I say that kind of tongue-in-cheek because there's getting a lot more recognition because there is so much activity, and people that want, they want some volatility, that's one to jump into. But one thing with hogs is it has overshot its objective every single time. So when you look at their prices, I mean, it'll overshoot it by a huge percent, like 20 plus percent on the upside and on the downside. And so I couldn't believe that the hog market just kept going lower and lower. It would kind of rally little spurts when we were hearing, okay, there's another case of African swine fever, and then it would kind of like pop up and then slip back down again. And I thought, what is going on with this market? That's what last week I said, we're getting to the point where we're
455
at a low that we haven't seen since like 2014. So I thought, okay, let's just take a look at this. There has been, there was talk that there was going to be But China was going to step up and buy the pork anyway, in spite of the fact that we had the tariffs. So I thought, well, this would be my indication was that once we breached through the resistance level of 76, we could. My target was 82. So here's what happened. The market went in a matter of like 3 or 4 days. We hit 82, and the volatility in options was telling me that this thing could continue to go. So at that point, we did hit our objective, and the option that I said to buy was the 82 calls. It was 176 when we bought it, and when we got up to 82, it was worth about $5. Then the market continued to rally, and it rallied all the way up to 98, and that option peaked at like $18.70. I mean, it was just a ridiculous number, and you never saw any nighttime. You never took any heat at all on that market. So this is where when you're buying these options and they start to move up, you can easily move your stop up. I always say that you want to be able to ride the winners and the best traders, and that's how you hang on to your money, and that's how you work it, is you keep pulling your stops up. I mean, sometimes you want to take a little bit of the profit, but there was almost no need. So what I'm saying is, what happened was there was almost nothing different when the rally started. But a couple of the shorts had to start to cover. Now they push it higher. Next thing you know, we're almost a limit move. That got everyone's attention. Everyone got out of the shorts. All the people that wanted to jump on, jumped on, and we were off to the races. And this thing rallied so hard. I mean, it's an emotional market at this point that we got up to 980. Now, when we were talking about it here in the pit just this last week, because it peaked, I believe, on Tuesday in this last week, and I said, okay, how far can it come back down? What's the objective? Well, halfway back is about 86. And of course, we got down to 88 today. We're almost limit down, but the limits are expanded. So there's $4.50 limit. Now, each point is $4,000, just to give you an idea of what the money is involved here. And they're the same for the options. So, you can turn around and say, oh, I want to sell it. The difficulty is there's just going to be wild volatility. Now, African swine fever still exists. There is going to be some, we're getting, grilling season is going to be starting soon. So all of those issues are going to be part of the livestock complex. And one of the things that happened was live cattle had been on a run for really a number of months, and I really expected that was my deal, was to buy puts in live cattle and buy calls in the hogs. But when the hogs rallied so hard, they pulled the live cattle up as well. So it kind of spiked up, and it just kind of was along for the ride. And now that the market's settled down, we're going to see some of the meats come down a little bit. But if you had that spread on buying puts in live cattle and calls and live hogs, you did very, very well. Now, I expect that there's still going to be very good demand for the meats right now. And we're just going to be watching fundamentals. So that's the one thing to kind of just take a look at. We'll watch the fundamentals and see how the market's going to move. Volatility is really here to stay in the hog market. And here's one thing to kind of keep an eye on. As springtime moves on and we start to really get planting and start to figure out exactly what's going on, I think there could be some real damage with a lot of the standing water mate. They're really difficult for the farmers to get any of their grain in the ground. If that happens, then we're going to have late planting. That's definitely going to affect our total carryout, and we're if they start to reduce the carryout number for this year, which would be really helpful for prices, and the grain market starts to rally, you're going to see a lot of pressure put on livestock because it will be too expensive for the farmers to feed their cattle and feed their hogs. Just so you know, so there's like a feed aspect to it as well. So that's something to kind of watch. But that was a great thing to take a look at. I still think that we have a lot of room. We have a big correction in the hog market that's already happening, and I think that we could have even another correction happen in the live cattle. There's a lot of traders in it, so it doesn't seem to be like it's going to fall out of bed anytime soon. But we can start to see it start to churn downwards a little bit. So we have to watch that closely. It's just been overbought. It's been sitting overbought for the past number of months. So it makes me wary to get long. But every time anybody wanted to short that market, they got run over by the live cattle. So that makes it's a very difficult one to kind of watch. But I think that when it does turn, then that's when you want to jump on.
You got Eddie?
Okay, I just want to put this into perspective for
Yes.
our listeners and viewers out there. I do have the daily lean hogs chart on. What I want to do is point out that we had you on, I believe it was March 8th, okay? And so I have the pointer right here, and this was trading right around, what, 770? 776? Okay.
Yes. Yeah, 76, yeah, 76, 77, something like that. Mm-hmm.
Okay, so the market started making a move on that particular day, and look at the run-up since then. So this is the last 3 weeks in that lean hog. So basically what you're saying is we may be on the verge of seeing a similar type of move in the grains, be it corn or soybeans or wheat, that you might be able to play that same potential. Maybe not in the same time frame, because this was really dead on pinpoint accuracy and good luck for us.
Yeah.
But
right.
but this is the type of potential that you might be able to see. Is that a safe assumption?
That is, because our prices have been depressed for so long. They've been depressed really for the past couple of years. I think that the difficulty in the grain market since the presidential election has been a little bit crazy, and everyone's not sure exactly what to do. But I know that we'll look back at this time and go, oh my God, it was just staring us in the face, but we were so fatigued with riding on the merry-go-round that we forgot to get off and get on the roller coaster,
Yeah, no, I'm with you on that one. So, were you able to take off for a good profit, those lean hogs,
Yes.
or are you still holding them?
No, I did get out, but not at the top, but it was okay. All the way up, before it got up to 90, it was kind of difficult to call it. It was a little bit nerve-wracking, and a perfect trade, I'd be in the Bahamas right now.
Yeah, well.
But it just tells you that it just overshoots its objective. I was shocked when it rallied again after being limit up and then limit up again, and I go, but let me just say today. So today we were almost limit down. I think we were down $3.50, almost $4, and then I looked up and I went, oh my God, what happened to the hogs? Then they were up, so they rallied back $4. That just tells you the market's really thin right now, and very, very volatile. And let me see, where's it at right now? So now we're down 172. So there you go. I think we might end a little bit lower, and that's just because everybody that's long, they're trying to take their profit off the table here, and they don't really know what's going to happen. Each week is like a lifetime in the grain markets, especially in the livestock market. So we start on Monday, we wait till Friday in the live cattle market. We're waiting for actual cash trade. And it never comes like Monday and Tuesday. We have to wait till Thursday and Friday until the feeders come in, and the feedlot managers buy the cattle, and we try to figure out where the pricing models are. Hogs is a little bit of another story because it's tied to so many other outside influences, and everyone wants to get out on Friday, and then they restart it again on Monday. So that's where we're going to see a little bit more liquidation today, just because the trend is a little bit to the lower side. Last week the trend was to the higher side. So there wasn't any liquidation. It was get back on. If you're short, you better get out on Friday because the market could rally again on Monday. And that's exactly what happened.
If you don't mind, give the listeners and viewers just some perspective of what the floor is like when you can sense that people are on the wrong side of a limit move.
Well, you don't have a lot of happy faces. Some of the guys are just you'll see the energy is definitely negative. So any kind of if somebody's caught short, it's kind of funny, or caught on the downside of getting hurt in the market. You kind of don't talk to them.
Okay.
You get and it really.
And you can tell who not to talk to, right?
Correct. The energy is just blasting off their head. Or you go, I haven't heard from so and so today. No, he's short and it's limit up. He doesn't want to get out. I'm not going to call him. And you tell him hey, I got this great deal. No, it's going to be all the vulgarities and everything, and all the cussing because he's so mad. Now, when it comes back down and they get out, then there is sweet as pie. But that's how that's the ebb and flow of the emotional part of the market. And these traders have done this for years and years and years, and it's just kind of like let it ebb and flow. Otherwise, you get it all bottled up, and it's just too much to manage.
Yeah, I can understand. I've been there and seen it, so yeah. Anyway, so we can wrap this up. Why don't we do a recap of the potential trades that you're looking at in the corn, wheat, and soybeans?
Well, kind of what's happened with the wheat market. I was looking at July $6 now. I originally bought them at 1 1/4. We got up to like 2 3/4 when the market started to rally. Today, everything kind of got sold off, and you can just pick them up for like 1/4 cent. Now, here's the whole thing. The market sold off like 8 or 9 cents, and it almost gave up the entire value of those options. So for 1/4 cent or 3/8 of a cent, that's about $12 per option. Even if you bought a 10 lot or a 100 lot, that's pretty cheap, knowing that if the market rallies 10 or 20 cents, you're going to probably triple your money. And you have till July, so there's like a number of things can happen between now and then. I think everyone's just kind of given up. It's Friday, forget it. This is the chance to kind of get a hold of something. Corn is corn is interesting because I was saying the corn, the July $5 call. Now I realize that we're at 360 right now, so it's going to take an awful lot to get up there. But at that point, we only paid a half cent for it. So where is it trading right now? It's 1/4. So you really haven't lost anything. You can almost buy more. With soybeans, we paid 1 1/4 for the July $11 calls. Now it's kind of like offered at a penny. None of the traders want to sell anything under a penny because the only thing they can see is that to make a penny and risk everything, forget it. And that's why buying those cheap options are great because because they're cheap. Your risk on the buy side is nothing. And this thing can really take off. The whole idea is managing your profit. When the thing starts to really go, do I get out? It went up to 3, like what happened in the wheat, right? So we paid 1 1/4. It went up to 3 cents. It doubled. Should I have gotten out of some? And now it came back down to a plain 1/4 cent. It's 6 of one, half a dozen of the other. Sometimes you want to just get out of as many options just to pay for whatever it is you bought, and then leave the rest on and let it ride. More times than not, all you have to win is 1 out of 10, and you can be a big, big winner. So I'm always a proponent of something like that, and it makes you kind of like watch the markets, and you can participate when you have the big moves.
Yeah, for sure. Where are the 385 July calls trading?
In corn, right?
Yes.
Hang on 1 second.
Because that's a level that I'm looking at that I find somewhat appealing.
Hang on
385, 390s.
Ask Pico if I can get the July 390 calls in corn. He'll have them there. Stay right here. Yeah, it's right. I'll get him. One of the guys. Yeah, he'll get him.
All right.
What do you say?
They're real busy over there.
Oh, they are? Oh, yeah. Oh, yeah.
I know. I can't right now.
Oh, yeah, don't worry. That's okay. Oh, yeah. Okay, so corn, look at corn really sold off even further, so it's down 16 cents. I can't see it exactly right now. These guys are kind of crazy.
Corn July 3.
This
5 1/8, 3/8.
It's 5 1/8, 3/8. The July corn, yes. July 390 calls are 5 1/8, 3/8. Okay, so normally on the downside in the grain market, volatility never goes up. Volatility goes down when it goes down. Yeah. Okay. But when it goes down, like something like this, there's going to be a big spike in volatility. But you'll see, like on Monday and Tuesday, volatility will come right back down.
All right. So it would make more sense that if you did like that particular level, to wait for the volatility to come back in before putting that on.
Correct. Yes, maybe. You want to look at selling a put. Yeah, because the volatility is very high right now. So you got to take it. So here's the whole thing. If the market rallies back like a dime, if it rallies back a dime today, of course that's just more volatility. But on Monday, let's say it starts to grind back up about a dime, you're going to see the price stay the same. It's just the vol's coming down, but the prices stay the same. So that's where it gets a little bit, a little bit testy with the option volatility. But that's how the game is played, and so there's a lot of opportunities. So in one particular case, you could sell those calls and buy futures if you want to do something like that, have some kind of a trade that way.
All right. Well, very interesting, very compelling. And guess what, Ginny? We're going to have you on more on a regular basis, if that's okay with you.
Absolutely. I'd love to do it. Thanks, Jim.
All right. Thank you so much. We got some good ideas out there. And hey, I hope some people out there made some money in that Ling Hog trade.
Yes.
So keep them coming, Ginny.
Okay, great. Thanks a lot, Jim.
Thank you.
Okay, bye-bye.
Hey, May 440, take back to 6.5.